All right. Hello, everyone, and welcome to our investing hour. It's great to be back with you guys. Sorry, we had a few technical difficulties uploading some stuff to StreamYard, but we are up and running. I hope you guys are all doing well. I see we're already flooding the comment section, which is awesome. You guys are off and running there. So for those of you that haven't already joined one of these before, if this is your first time, my name is Mark Rusin. I'm a CPA here in the state of California. And what we always like to do is see, where are you tuning in from? What have you been buying in your portfolio or selling over the past week since the last time we met? So let us know down in the comment section. This is meant to be just a group discussion where we're going to go through things that I'm seeing in the market, give you guys kind of a little bit of what I'm seeing. We'll talk a little bit about Nvidia. We'll talk some about Crowdstrike, two of the primary companies that reported earnings this week, and just kind of get a feel where things are headed and tell you about a special event that we have coming tomorrow in case you haven't heard about it yet. So, Michael, I see you. How are we doing there? McVeigh, good to see you. Senzu, hello. John Clays from Minnesota. King David's in the house from DC. John, good to see you, my friend from Tulsa. What do we buy? Berkshire, the new $1 trillion company, the first company to reach that historic, what are we going to call it? Level outside of a big tech company there. So Berkshire, now a $1 trillion company. Long, good to see you. Sean from Singapore, congratulations on your 60,000. Yeah, thank you, my friend. Yeah, so we did surpass 60,000 subscribers on YouTube this week, so that was a big accomplishment for us. Moving our way up towards 100,000 so we can eventually get that play button, but that's not the goal. The goal is to make more millionaires and help you guys build the wealth along the way, though, because I have fun doing it. All right, what do we got from Brazil? Brazil tuning in. What do we got? Who else is it? Cindy, good to see you. Matthew, good day. Bought some VIX, VIX, some NetStreet, and some O. Oh, we're buying some Walgreens. Interesting play there. John just did some Roth conversions today. Nice. Some dollar. I made the live again. This is my quarter. Love it. Great to have you. Hey, Mark, still dollar cost averaging into VU, SCHD, and Visa. That is a sound strategy right there, my friend. Frank, how's it going? Hooray for 60K. I love it. Thank you, guys. Thank you. Without you guys, it wouldn't be possible. All right, what do we got going here? Greetings from Dallas, Fort Worth. Sean bought some Realty Income and some Mo. Benson, what do we buy? Oh, I like these names. SCHD, Vici, Johnson & Johnson, and JEPQ. King David's going to be buying some PepsiCo, Johnson & Johnson, IBM, and a little JEPI. San Francisco's in the house. Good afternoon, Sophia. B. Hall added some Oxy and some CSX. McVeigh buying some SCHD, OMF. O. AbbVie sold my JEPI. Awesome. Well, you guys are off to a fantastic start. Thanks for everyone for tuning in, and let's just jump right into our slide deck here, taking a look at where the markets are right now. I know a lot of you guys missed the slide deck, so we're going to throw those back up here right now. So here's a kind of a snapshot of where our economic update is. Where is the market, the major indices right now? We see the Dow Jones up year to date, 9%, S&P 500, 17.2, leading the charge and surpassing the NASDAQ, who's right on its tail at 16.9, but that could be changing here quite very shortly. And the Russell 2000, so our small cap index, is at 8.7, bringing up the rear. So you can kind of see I added the last 5 trading days of where these indices have been. And the biggest laggard has been the NASDAQ, which will most likely see another dip tomorrow based on where we're at with Nvidia after hours. So that'll be interesting to see how far we fall, how much it pulls down everything. So stay tuned for that. How about valuation? Valuation using a forward estimate. So 2025 estimates right now of around 265. They've been coming in, depending on who you ask, around mid 250s to up to 265, 270. So we're still using 265. 2025 S&P 500 puts that at a forward PE multiple of 21.1. That's pretty high, especially considering the 10-year average is at 17.9. Even further out, we're talking about an index that's closer to something like 16 times overall. So we are definitely in that territory right now where things do look quite expensive. And when expectations are high, when you have big run-ups in the stock, and it pushes those expectations high, when you don't meet, raise and guide forward with much higher expectations than what analysts were looking for, it's sometimes just not going to be enough. And that's the cycle. We need to kind of taper those expectations. Well, how does that kind of, how can all of this level out? It's usually with a pullback. It's just something we need. We really haven't had a much of a correction here in 2024, just based on fundamental trading. What happened on August 5th at the beginning of this month had nothing to do with a correction. That was all Japan related from that standpoint. So we really haven't had that big selling moment, as to where a lot of folks are saying, hey, I need to taper down those expectations, get those back in line, because at some point valuation matters. It all comes back to valuation. You can't just keep letting prices just go without the results staying up. That's like looking at a house that just sold for $500,000, and tomorrow one comes up for sale, and you're like, oh, it's the same house. I don't care. I'm going to pay an extra $100,000 for it. That's just not the way that the economy works. You're going to want to look at comps. Okay, that's the same exact. Are there any differences at all, and why this deserves a higher market multiple, a higher premium, a higher sales price in the sense of the house? So those are things that need to be kept in mind. We can't just keep buying endlessly here. So let's continue on here. Where if it's very interesting, if you guys are paying attention to interest rates, and if you're an investor, a long-term investor, you do want to pay attention to interest rates. They're going to matter. Again, just like valuation matters. And in case you didn't know, the bond market is much larger than the stock market. So there's a lot more money going around there in the bond market. And if you look at it, we have the 10-year sitting right at 3.84%. You have the 2-year sitting at 2 or 3.87. They are right there, neck and neck. Something we haven't seen for quite some time. So it's definitely something interesting to keep an eye on between these two, because remember, the inversion is something that was talked about a ton for quite some time, but now we're starting to see that an inversion kind of come back to reality. So let me get on here and share my screen with you guys really quick, so you can kind of see where has this spread been coming from. So this is going to take a look here at our 2 and 10-year spread overall. And if we look back, this is back to October, so this is going back a year. We can go back 5 years just to kind of give you an idea on where this is typically at. So pre-stock market or interest rate hikes, we should say, you could see that the spread was normal, the 2-year and the 10-year spread. But then we inverted where it actually went negative, where we had a 2-year that had a much higher overall spread than the 10-year. But since pretty much, you can call it, July of last year, we've kind of been slowly moving our way up. Then we kind of stalled out for a bit, and now we're sitting right back on our way up again to where it's pretty much even, a 0.03 difference, which you and I just looked at right here. That is the closest we have been, dating all the way back to June of 2019. So that's definitely going to have an impact on what's going to be moving forward here in terms of the stock market, how things are going to be working moving forward. So thing to pay attention to if you are an investor, a long-term investor, managing your own portfolio, things that we want to pay attention to overall. So what else do we have on our economic update overall here? If I can get my buttons working right. Nvidia earnings. Obviously, you may or may not have heard of that. Nvidia reported earnings today, so we're going to take a closer look at those Nvidia earnings. Some people calling it the Super Bowl of investing. I wouldn't quite go that far, but it obviously was a major earnings report, given the fact that Nvidia accounts for a large percentage of the S&P 500, and how Nvidia has gone is how the S&P 500 has gone, just due in part to how much weight they carry. So looking right now, before we get into it, Nvidia is currently down 6.9%. So 6.9% right now for Nvidia. And if I go over and look real quick, and we're going to look at these in more detail in a second. If we look at Crowdstrike, they're down about 3.5%. So this is their first earnings report since that complete debacle they had a little while ago, a few weeks back. So we'll take a closer look at those earnings reports, see what's going on with them, and then for both Crowdstrike and Nvidia. All right, let's see what else we have. How about a dip? We have seen since that August 5th, we saw that Japan dip there, but things bounced rather quickly. And they bounced in a big way for many stocks that are out there. So that'll be important. But are we setting up for something, maybe somewhat of a rotation? Are we setting up for something of just a full-fledged dip buying opportunity? Be curious to kind of hear your take as it pertains to that moving forward. But what I want to do first is keep going on our slides here, and we're going to take a second to look at some of our sector performances to see which sectors are performing better than others. So let's first take a look here at the Fear and Greed Index, which is sitting right down the middle, not really giving us much of an indication. You know, we have seen this swing from extreme greed all the way back to extreme fear rather quickly, but right now not getting much of a sense. Investors are really unsure of what direction this market is heading, and part of that was due in part to the Nvidia earnings coming out, because that is going to play a big role overall in the direction of things. So let's begin by taking a look at our sector performance. So let's add that back to the screen here and take a look at how things are doing. And let's start by taking a peek at year to date. And the last time we checked this out, there was only about 3 sectors that were beating the overall index as a whole. But now, as we look closely, there's actually 4. So utilities have joined in outperforming. Financials has been a solid sector, and I believe that's one that has plenty of upside moving forward. How about communication services, technology? No real surprise there. No real change there in terms of what we've been seeing of lately. So we got 28% and 23% as it pertains to info tech and communication services. So we got 4 sectors right now outperforming the S&P 500, but we still have every single sector. All 11 sectors within the S&P 500 are sitting in the green. That's fantastic from that standpoint there. So bringing up the rear right now is consumer discretionary. So that's been an area that's been a little bit weaker. Energy at 7.8. How about real estate? Real estate has had a nice little run of late, especially in the past few months, but probably settled down just a little bit of late here. We got materials. Those are the only 4 sectors that are in single-digit returns year to date here in 2024. Let's take a look at 3 months and look at that real estate. And we've been talking about it well before 3 months here. So for those of you that have been tuning in to our investing hour here, you've been giving the green light here to say, hey, this is a sector. If you are value hunting, if you're looking for upside potential, we don't necessarily need to chase technology stocks that are trading at extreme premiums. How about you look for high quality companies that have been lagging the market? That's the name of the game over a long period of time. When those technology companies, because they always do, come back to fruition, come back to life here in terms of valuation making sense. You know, you can't just blindly invest in stocks. It's got to make sense from a valuation perspective. So look at that, real estate, and no one is even close to it. How many other channels can you go out there and say, hey, this person's been pounding the table as it pertains to REITs? I've watched a lot of folks here on YouTube. And I would have to say, you know, without patting myself on the back, I'm a big investor in REITs, and I understand the market. I understand the market sways. So, you know, a lot of you can kind of that have been tuning in here understand the direction that we've been talking about here as it pertains to the REIT sector. So, and I know a lot of you have been adding to it and continue to add to it, rightfully so. So we've seen the gap closed. We've seen REITs kind of bottom out where they were just trading at ridiculous valuations. And I told you, hey, we've seen the blueprint here. Go back to 2023, from pretty much Halloween 2023 through the end of the year. You could see what REITs are going to do. It was all the talk about interest rate cuts are coming. We're going to get 6 of them in 2024. So far, we've gotten 0, but 1 is coming, or multiple are coming, I should say. But we got the blueprint. They sold off, and lo and behold, here we are. We're back to where we were at the end of October, and we're starting our charge back higher again. So REITs are moving higher. Rates are coming down. Things are doing good. We are looking for value. That's what we look for on this channel, whether it's growth stocks or whether it's going to be more your traditional value stocks. You can find value plays in some of these high growing stocks that are out there. So don't think that I'm just looking for these slow moving, you know, single PE type stocks. No, I'm here to look. I'm here to find and make money. Okay. I'm here to help you guys make money. That comes through dividends. That comes through capital appreciation. We're all looking to build generational wealth, but we want to do it the right way. Okay. We don't want to get caught with our pants down. We don't want to catch falling knives here. We want to do it the right way, and we want to stick to our strategies. That's the sole focus. That's the way we generate long-term wealth and continue to do it moving on. So let's take a look now at the past month to see how things have been performing. So real estate still has the lead, but not as big of a gap as it had a few months back. Utilities, so that's interesting. So if you want to get an idea on whether the market is beginning to broaden here, if you want to get an idea on if investors are concerned about the at least the near-term move in the stock market, Just look at what sectors are working. And when we look at sectors that are working, you see real estate, a bit of a defensive sector. You see utilities, very defensive. You see consumer staples, another defensive sector from that standpoint. These are things, utilities and consumer staples especially, are things that folks have to spend money on. They have to go buy food to survive. They need to pay their electric bill, keep the lights on, their gas bill, all of these things that pertain to utilities there. But at the bottom, we see maybe we don't have to go buy that new car. Maybe we don't have to go buy that new wardrobe or those new Nike shoes per se. So very interesting from that standpoint there on what's going on. And maybe it's a little bit of a broadening. It could be that as well. And we're not really going to pay too much close attention to what's been going on here today specifically. So with that being said, let's keep moving. So let me take a quick poll since we got over 230 people here in the live show right now. Awesome to have every single one of you. For the next 5 years, and we like to do these audience questions all the time, for the next 5 years, which of these would you rather own today? If you can only own one of them, is it going to be individual stocks, Microsoft and Nvidia? Or would you rather own the ETF SCHD? You only got 5 years. You can only pick one of these three. Let me know in the comment section down there, Microsoft, Nvidia, or SCHD. I'll give you a few seconds. In the meantime, I'm going to scroll back through the comments here, make sure I'm not missing anything in particular. Cheers from New Orleans. Phillies in the house. Got Nvidia at 115. Toronto is in the house. William, not buying anything at the moment, waiting or a small decline. You might get that tomorrow, my friend. Julia, great to have you. Welcome to the channel. Denise, hello. What do you think of the electric utilities to play the providers who supply the data centers? Definitely an interesting way to think about it. And I've heard different angles there. So when it comes to investing in utilities, not a sector that I follow all that closely. So I tend to go towards XLU. So same thing with energy to a degree. I'll invest in XLE, which is going to be the Energy Select Sector Spider ETF. I have a few. So I have some Next Era, NEE. And then on the energy side of things, some ConocoPhillips. I've traded in and out of ExxonMobil over the years, but that's kind of the way I play it. Michael, be fearful when others are greedy. Isn't that the truth there? The old Buffett, who now owns $1 trillion company in Berkshire, first non-tech company to reach that height. Hoagie or Hogue, hello from Indianapolis. I'm investing my first $2,000 into an HSA next month. There we go. That is a big time tax saving. So if you guys have access to an HSA, definitely make sure you're taking advantage of that. It's the only real triple tax advantage tool that you can have in out there. You can put pre-tax dollars in, your money's going to grow tax-free from that standpoint, and you're going to have no taxes on the back side of things either. So definitely take advantage of an HSA. King David, I'm retired and would like to see interest rates at 5% for a 5-year CD, treasury, or bond. I need to consider income. So that's going to be the thing that we have to think about moving forward here with interest rates. It is well known, and it's less of a talk of if it's going to happen. It's more now of a talk of, are we going to get a 25 basis point cut, or are we going to get a 50 basis point cut here in the next Fed meeting? And we can go right now and just look at our CME group to take a look at what are the futures numbers tuning in. So if we look here, here's our Fed Watch tool that you can see right now. Again, it's not a matter of if, it's a matter of how much. 62% are saying we are going to get a 25 basis point cut. 38% of folks are going to say we are getting a 50 basis point cut. And you can kind of see where that has come from over the time. So that was as high as 64%. And now that is increasing in terms of more people moving to the side of saying we are getting a 50 basis point cut here in September. So that's the September meeting. If we go up to the November meeting, which is only about 3 weeks after this next one here, you could see we're going to be sitting at another 50 basis points. 45.8, believe we are going to be at 450 to 475 range. Right now, we're sitting right around 525. So as you can see up here, 525, 550. So that would be 75 basis point cut between now and the November meeting. And the final meeting, which I believe still that we are getting cuts in September and December, we could see that 44% believe we will have 100 basis points of cuts between now and the December meeting, whether that comes staggered out over every single meeting or whether that comes between September and December. I believe they will likely skip the November one just because of, in case you guys haven't heard, there is a presidential election this year in the States. So they'll probably skip that. That's just my guess. I obviously have no inside knowledge. I haven't texted the Fed chair at all recently. So no insight knowledge at all, but that's kind of where things are. But with interest rates coming down is what we were kind of talking about there in terms of David's comment was there's going to be a lot of those investors that had risk-free money sitting in 5.5% high-yield savings accounts, CDs, and things like that. Well, a lot of those are tied to that Fed funds rate. And banks are slow to move rates up. So when interest rates were hiking, you didn't see your savings account hike all that fast. No, they take their sweet time to do that because that's money out of their pocket. But you better believe that when interest rates are cut, those high-yield savings accounts, your percentage on your savings yield on your regular savings account, those are going to go down a lot faster. Trust me. That's just the way it works, the way the cookie crumbles from that standpoint. So now you have this big subset of investors that are really just income investors saying, okay, well, now the 3% doesn't really make all that much sense because as we have seen for the past few years, that 3% is losing to inflation. We need to beat inflation. That's the name of the game when trying to build wealth, because if not, your money's going to be getting eaten away. That's why we can't hide money under our pillow. Money that just continues to sit in a safe, money that just continues to sit in your bank earning less than 1%, that is just withering away. Now, if we're talking about our emergency fund, that's going to be a whole different story. That's money where, yeah, sure, we don't want to take many chances, but a high yield savings account, that's going to be good. Let's just do something with it to a degree. You can get very safe with a lot of these things here. I probably wouldn't invest it in the stock market though. So I wouldn't go that far overall. So let's keep cruising through and see some of the answers. Let me see. Hello from Florida. Good to see you. Picked up some Mo and some KO there. All right. Here's some answers to what, guys, what do you predict for the Nvidia stock tomorrow? Well, based on the after hours, looking like we're going to get a bit of a nice little slide here. So, all right. So we had Microsoft, Nvidia, and SCHD. Let's look at the results here. So we got SCHD, Nvidia, SCHD, more SCHD. Spikey's going Nvidia. Stanley's going SCHD. Carl's going SCHD. Spikey's going to vote twice for Nvidia. What else? John's going SCHD. Paul is going to go Nvidia. Sean SCHD. So it's pretty. Did anyone vote for Microsoft? There we go. Patrick, we got one. Hoagie voted for Microsoft. Okay, so it's pretty much a split between either SCHD and Nvidia. And I have to say, I'm probably leaning towards SCHD being the clear front runner here. Congrats on 60,000. Thank you. I appreciate that. More SCHD. Okay, Microsoft's making a little bit of a turn. Jeffrey, good to see you, my friend. Jeffrey lives up in that area, so I think he's a little biased on tuning into and picking Microsoft. I'm working with a client right now that actually lives up in the Pacific Northwest, and her and I were talking about just the market cap of companies that work out there is fascinating. Everyone wants to think about just Silicon Valley, but the Pacific Northwest, when you got Boeing of the world, you got Starbucks, and we had Microsoft that is up there. Jeffrey could probably help me out and name a slew of other companies that are up there, but it's fascinating that the number and the size of these companies is just huge up in the Pacific Northwest. Nvidia for Jess. Tim, good to see you going with Microsoft. So David said, this is the great Wall Street powers getting the market to sell so they can come in and buy low and make a fortune. So as sad as it is, David, that's the way the cycles typically go. What they like to do is they like to build things up, and then you go through this YOLO period and this period of euphoria where a lot of retail investors don't want to miss the boat. And they just invest blindly. They don't look at any valuation. They just see Nvidia going from 650 to 750 to 850 to 950 to 12 to 1300. And by the time they're at 12 or 1300, that's the time they're like, okay, my dentist is talking about it. The person that's bagging my groceries is talking about stocks in NVIDIA. I better just go get in. I have no idea if it's a good buy or not. And that's usually the time that we get in trouble. But then what happens from there is once this period of euphoria goes through, and Jeffrey said, how can I forget about Amazon? That's so true there too. You go through this period of euphoria, and then what the big hedge funds do, these are the ones that have the biggest monies in the industry here, in the market, is they sell off in tranches. They don't want to sell everything because they won't be able to sell at high levels. They won't find enough retail investors to buy at those prices. So they sell in very small tranches. They sell, boom, the stock falls. But again, they sold at a much higher rate. But then retail investors go buy the dip. You know, every time you get a 5%, you got to, especially on Seeking Alpha or here on YouTube, buy the dip on certain stocks. But they don't give you any substance on why are we buying the dip. Is there a reason that we're buying the dip? Or nope, it's just the stocks are down. Let's buy the dip. We just buy the dip every single time. Well, let's look at valuation, because a stock going from a 48 times multiple that historically trades at 30 times, and now it drops 5%, and let's say it's still trading at a high 30s multiple, still ain't that cheap. It's got to make sense from a valuation perspective. So we don't want to just blindly buy every single dip that's out there. We want to make it make sense. Valuation, everything we do within our 6-week program there. So, G, what's up, Mark? Love your content. First time catching one of these lives. Great to have you. Costco, yep, that's one of the ones up in the Pacific Northwest. Here we go. Pacific Northwest here. Also, Microsoft, Amazon, and Costco. That is fantastic right there. All right, so let's show you what we got coming here tomorrow. So that was our poll that we just went through, and thank you guys all for tuning in. Let me tell you a quick second about an amazing event that we have tomorrow. So I do these periodically here, but tomorrow we have our Q3 market update. So I know that we're still in Q3. We got a month to go here in September, but I want to have you guys set up for what is historically the worst month for the stock market. Historically, when you look at seasonality, September usually just ain't a great month. And I said ain't. Yep. Ain't a great month for the stock market here. So we have our free Q3 market update. You can sign up and join us. There's a link down in the description below for you to get signed up for that free event. It's going to be an amazing event tomorrow. We will be touching on recap of Q3, where we're at so far. I'll be going through my top 10 positions. I know folks always like to see that and how that has kind of moved around over the past few quarters and things like that. Discuss areas I'm concerned about in the market. Discuss areas that I'm looking to invest. What am I excited about? Where do I see some cracks? Where do I see some opportunities? All of this stuff and much more we'll be talking about in our Q3 market update. So you can sign up using the link down in the description below. It's going to be a fantastic event. And the best part about it is, in terms of price, it's free. So there is nothing that you have to pay from that standpoint. Just come and enjoy. It's very similar. We go in more in depth than our live shows here. It's kind of a branch off from that. So it's going to be a great event, and hope to see you guys there. So third quarter already. I know. Where has time gone, Tim? Time flies when we're having fun here. So let's keep moving here on our regular scheduled event. So what I'm going to do now is let's go through some earnings. Do we want to go through Crowdstrike first, or do we want to go through Nvidia? And I know folks are probably going to want to go through Nvidia also. So, and yes, John had a question. Does VIP? So when you're signing up, there's an option to sign up for VIP if you want. You will get a recording to this to the event there, and you will get a free book that'll be added in there as well. So some great stuff, guys. I know, John, you're going to be there. You're always a great supporter, always have good questions, always looking to learn. So we will see you there, John. Who else has already signed up? I know we already have a couple hundred people that already signed up for this event. So if you haven't signed up yet, definitely check out the link down in the description below, and you can get yourself signed up and get a spot in that free investing webinar. So let's cruise over here and take a look now at Nvidia. So as you can see right here, Nvidia down now 7.5% almost after hours. So 7.4%. So that's with the wrapped up quarterly earnings call. So I obviously haven't had a chance to listen to that yet, because I'm here with you guys. You find folks taking a peek at what's going on in the markets. But let's take a closer look at some of these results. So based on the earnings, the first look, I should say, of what Nvidia gave us, reports weren't that bad. They beat expectations on almost every level that we saw. They added us a buyback plan, which isn't that big compared to the company size overall as well. But there are concerns about slowing growth, which probably makes sense considering you can't just keep growing at 200%. Those comps are eventually going to get difficult and going to come down. It happens to every company. Look at even the Microsofts and Apples of the world. Look at their trajectory. Well, Apple doesn't even barely grow anymore these days, but that's a different story. Hopefully they will with this new Apple iPhone that's going to be coming out from that standpoint. And I got an eyelash or a hair in my, there we go. I could see again. So here we go. So we got the Q2 again. They're on a fiscal year end, so they're in their Q5 or their 2025 year. Reported at 68 cents. That beat analyst expectations slightly by 4 cents. You could see our revenue came in at $30 billion. That was a 122% growth year over year. We've been hearing about these growth figures for Nvidia for a number of years now, and they continue to beat them. Like I just talked about the comps. They're comparing to last year, which was an absurd amount of growth as well, and they just continue to crank it out. But this shouldn't be all that surprising to us as investors. And the reason being is the fact that we already pretty much knew this was going to happen. How do we know this was going to happen? Well, if you look at Amazon, if you look at Microsoft, if you look at Alphabet, if you look at Meta, all of the largest companies, we're just focusing on kind of those Mag 7 type technology companies. And what do they all have in common? Higher capital expenditures. I put out a video recently that's showing you the sheer numbers for some of these on a quarterly basis. They're getting higher and higher every single quarter. The Google CEO came out, or the Alphabet CEO came out and said, the biggest risk to us is under investing in AI. So we have tons, billions of dollars, $60+ billion for pretty much each of those major companies that I just talked about. A little bit lower now that Meta has pulled some back, but billions and billions of dollars going towards all of this AI related stuff. And we would probably easily say that 80 to 90% of those AI related dollars are going towards Nvidia. So it wasn't a big surprise that they beat earnings. But as I tell students who come through my 6-week program, is the fact that investing is less about what you did for me and more about what you're going to do for me. You've already cranked out those results. That's going to be a one-day movement pretty much, or I usually have a 3-day rule. But moving forward, investors are hoping I'm investing today for future growth. That's why we invest. We invest today for future growth. So that forward guidance is going to have a lot more weight than beating earnings per share by 4 cents, then beating revenues by $1.3 billion. That's a pretty good beat right there overall. So that's top line, bottom line overall. But let's kind of look in the middle and see what made up this. Well, record quarterly data center. That shouldn't be a surprise at all. $26.3 billion. That was up 16% just from the last quarter and up 154% a year ago. This is one of those growth drivers that I've talked about as it pertains to, we're going to circle back to REITs. Look at EQIX. Look at DLR, data centers, and all of this stuff with cloud and AI. There's a need for more data centers. Some of these larger companies are able to build some of their own data centers, but the growth is still going to be there for the likes of EQIX. So let's keep going through this report and taking a closer look at it. So in addition, they announced a approval of a $50 billion share repurchase. So the company's generating so much in free cash flow. And there's 2 ways to return money back to shareholders, 2 primary ways. You can do it through dividends, or you can do it through share buybacks. A lot of folks like both ways. Share buybacks is much more tax efficient to us investors. It doesn't really matter if you're holding the dividend stock in a Roth IRA, but if you are holding it in a taxable account, dividends are going to be a lot more tax heavy to you overall. So now we're going through our Q3. John said, Mark, you're not sharing your screen. Hopefully you guys can see my screen right now. So here's kind of the Q3 outlook overall. Revenue is expected to come in at $32.5 billion. Analysts were expecting $31.75 billion. So roughly give or take 2% from that standpoint. Non-GAAP gross margin sitting at 75%. That is fantastic. This is a very, very high margin business overall from that standpoint. But one of the things that they had talked about were some of the delays with their Blackwell stuff coming out there. So that is just a movement from Q3, which is why some of this guidance was down, to Q4, but it's also not much of a surprise because it's been talked about before. Looks like John. Okay, you guys can see the screen now. Perfect from that standpoint. So that's kind of a snapshot on where the earnings are overall. But let's see if we can kind of dive in a little bit more and look at some of these charts here. So we looked at gross margins. That's not the one we want to look at right now in the earnings snapshot. Let's take a closer look here and see, what were analysts expecting overall. So analysts were expecting the company to earn 64 cents per share and 28.7. That was in the second quarter. Here's some commentary from the CEO. So Hopper demand remains strong, and the anticipation, this is what I was just talking about with Blackwell, is incredible, but there are delays. There's no problem in that. It's not a demand issue right here. It's, the likes of Taiwan Semi, which is another way to play all this AI craze, is another way to, they don't have enough capacity to help with the likes of Nvidia. It's usually a good problem to have, right now. So Blackwell samples are shipping. This is from the CFO, are shipping to partners after some concerns over delays. So those will be going out, and a lot of that revenue is going to be transferred from their Q3, where it was expected, now to Q4. So, it's still within this fiscal year overall. Again, the $50 billion share buyback program, that's fine. But again, we're talking about a $3+ trillion company here. So will it move the needle all that much? Is it that necessary? I didn't think it was something that's all that necessary right now, especially with the growth that we're in. Some of the things to note, though, when it comes to Microsoft is, the CEO's been selling a good portion of his shares. We have seen the stock kind of flutter out a little bit. It dipped down into the 90s on August 5th. We quickly, I mean, it's only August 28th. So what's that, 3 weeks since that period there? We're already back up at a stock price of 130. And we have seen the CEO in the past few months selling more and more shares. So, there could be a number of different reasons, but, we also don't see him buying any shares or any major executives buying any shares there. So that's something to take note of, is trying to ask ourselves, is Nvidia likely to drop here, or is it likely to have this 7% drawdown or whatever it may be, and then we jump from there? I think in the near term, you're going to get a better entry point. In all honesty, based on, the valuation actually doesn't look all that terrible, but just given, some of the delays, given some of the rotation, the broadening in the market, the overall just valuation of the market, I believe you will see, and this is, again, just my opinion, no financial advice, but I believe there will be better entry points as it pertains to Nvidia. So let's take, what I'm going to do now is I want to take a quick look at the chart here with you guys. So let me add that back onto our screen there, give you the full slide. So here's a look at Nvidia right now in terms of where the chart is. So let me widen that for you. And you could see that we jumped up, and that was in June, the end of June. We got up to about 140. So that was the last, that's pretty much our resistance right now. In also about 130, 135, you can call is really where resistance is, because we've kind of hit that level, bounced back up, and we've kind of retested it a number of different times in the past few months. So that is an area to focus on if we are in fact looking to sell some shares, or you're looking to use some options there. Now we could see post earnings, we're closer to about 115. 115 was the low point on where we dropped back at the end of June, which was only 2 months ago from that standpoint there. And then the low point where we got on August 5th, we got all the way down to $90 and change. So again, are we going to drop that far? Who knows? I don't think we will get all the way down to $90, but could we see the low 100s again? I don't think that's necessarily out of the question. So the next one that we want to focus on is probably going to be the 100-day moving average, which is sitting right now right around 110. So we got the 100-day sitting at 110. We got the 200-day sitting closer down to where we were back on August 5th. So those are kind of the areas that I'm focusing on as an investor in terms of where we could see Nvidia fall. So results we're still fine. We're seeing some delays, growth slowing a little bit there. So we'll have to see, how does it all shake out tomorrow? And when it comes to these big moves in these stocks, I usually have a 3-day period, a 3-day rule that, hey, I want to see stocks make their moves and things shake out for about 3 days prior to me making any changes myself from that standpoint. So that's what we want to focus on overall. And then, so again, that's going to be NVIDIA. We're going to take a look here at CrowdStrike in a second, but let me see, we have a bunch of new people that are already on the slide or on the show right now. Let me take a moment to tell you about our Q3 update. So we're going to be talking a lot more about the likes of NVIDIA tomorrow and all of the Mag 7 stocks in our Q3 market update. This is a free event that you can join. There's a link down in the description below. It's going to be at 8 p.m. Eastern time. So we'll be going through our recap of Q3 through the first half of the year and then where we've gone through Q3 so far before we venture on to Q4. So again, September's historically a rough patch. So it's important as investors that we start building up a watch list. It doesn't mean a list of stocks that we want to buy right now, but if they in fact fall, we want to find those areas that we're comfortable. And what does it all pertain to? Valuation. So we're going to start trying to build out a watch list and go through the importance of that. We'll discuss, sectors I'm concerned about, sectors I'm optimistic about, where I could see some broadening and a lot more. So definitely check out the link down in the description below overall. So let's keep rolling here and take a peek now at CrowdStrike. So let me pull up our CrowdStrike results. This is one I didn't really have as much of a chance to look at overall because I was so fixated on what was going on with NVIDIA. So let me share my screen here. All right, here we go. So CrowdStrike reported EPS. Again, non-GAAP is usually what we want to focus on because that is going to be your adjusted earnings, your more apples to apples overall. So our Q2 EPS came in at $1.04, beat analysts' expectations by 7 cents there. Revenue came in at $964 billion. That was growth of about 32%, pretty solid. That beat by 5.55 million. So pretty much a double beat and a pretty easy beat on both the top and bottom line. Pretty solid there. Subscription revenue. Again, when it comes to CrowdStrike, they're all about annual reoccurring revenue. Subscriptions, they're usually going to be 12 months in length there. So that's something you want to focus on. Subscription revenue came in at 918 million, a 33% increase compared to 690 same quarter in the prior fiscal year there. Annual recurring revenue grew 32% to 3.86 billion. So right now, all the subscriptions that they have signed and they are starting to have play out in 12 months from now, once they are all earned from that standpoint, we will be at about $3.9 billion in revenue that they will eventually incur. If they sign a 12-month revenue contract per se, and when it comes to accounting, a 12-month contract, they can only take 1/12 of that every single month into their income statement. The rest of it has to sit on the sidelines until they have earned that. How do they earn that? They don't let the intern push the update button and have the whole world shut down from an IT perspective there. That's one way they do not earn money. So I think they said they have fixed it. They came out, and I don't know if you guys saw this, but they came out and said the impact, and this was a massive impact, the impact is only going to impact the bottom line by 0.02 cents per share. So if you believe that, you can, but there's a lot of analysts that are already coming out a little bit frustrated on saying, how could you say that it's only going to impact it by that much? Sure, you have the subscription revenue, but you have a lot of folks right now that say, hey, we're going to let this play out. We have 5-6 months left on our contract here, but when that's over, I'm leaving, or maybe I'm diversifying. Maybe I'm going to lower my CrowdStrike. I still, this is no issue with CrowdStrike, the product. I still believe that CrowdStrike is, the top name in cybersecurity. They had a bonehead moment from that perspective. So there's reputational damage that comes with that. We have seen that. There's going to be financial impacts. They're saying 2 cents. I don't believe that. I think that's hogwash, but we're going to have to see how this stuff plays out over time there. So let's keep looking here at the slides, and we could see that subscription gross margin came in at 81%, just like NVIDIA, a very, very, very high margin business, which we love to see. That increased from 80% in the fiscal quarter from last year. They have $4 billion in cash. Adoption rates were at 65%, 45%, and 29%. That's looking out for the 5 or 6 and even 7 more modules. So that's, folks, how many different things are they connected to CrowdStrike with? That was as of July 31st there. Okay, how about the guidance? Moving forward, revenue is expected to be at 979 up to 984. And again, as a reminder, we were at 964, we'll call it. in this quarter. So they believe revenue is going to increase in the coming quarter, which is Q3. However, that fell pretty short. Analysts were looking for 1.01 billion there overall. In terms of the bottom line, earnings per share, 81 cents is expected. Analysts were looking for 96 cents expectations there. So a big time miss overall just on the next quarter. How about further out? Again, they're in their 2025 fiscal year end. So revenues of 3.89 billion to 3.9 billion overall. Analysts were looking for 3.96. EPS is going for a range between 361 and 365. Analysts were looking for 3.91. So again, it's less about what you do for me and more about what you're going to do for me. And in this case, they fell short of analyst expectations. Stock was up right out of the gate after hours. When this thing came out, they said, oh, people looked and went, oh, we beat on earnings. We beat on revenues. It was less than feared. And that's one of the things, if you guys have joined me before, that I hate to hear. Oh, it wasn't as bad as I expected. I want good results. I don't want this. It wasn't as bad as expected. I'm not all fired up about a stock that it wasn't as bad as expected. So CrowdStrike's one of those ones that still on my watch list, not one that's just completely been thrown out. It's hard to do valuation on a company like this because traditional valuation metrics aren't going to work as much because we don't know the true impact for another 6+ months from this standpoint. How many of those current customers are actually going to bow out and say, hey, I'm done with this company? Think of Delta. You think Delta is going to, they may get some kickbacks to stay with them, but they had over 5,000 flights that were impacted. Do you think Delta really is eager to stay with CrowdStrike, even if it is the so-called top cybersecurity company? We're going to have to see how that plays out as well. So let me see, what questions do we have in what do we go on? Any questions? NVIDIA, risky or will it go up? We just talked about that. We're waiting here. SMCI, that one was impact. That one looks like a falling knife as well. What's a good way to get 5% when interest rates on high yield savings are drying up? So are you looking for zero risk 5%, or are we looking for, it could be a combination of capital appreciation, dividends, things like that. If you're looking for no risk and more fixed income, you're going to have to go more to the bond side of things. But to get the higher rate, you're going to have to go in lower quality bonds, which adds a little layer of risk there overall. So really depends on what you're looking for there overall. What time do I buy tomorrow? Is that for the workshop, for the investing Q3 market update? You could buy right now. You can join the update right now, Rich or Ron. I'm sorry there. What else? What else do we have? NVIDIA. I'm just going to buy more SCHD. Love it. Brilliant. John's going to be buying some more SCHD as well. SCHD is the way to be. Some of you guys got some great sayings today. V is fairly valued. Visa is a fantastic company. We have seen their share price come down. Valuation starting to look a lot more enticing, but we do need the consumer to hold up. So if you're a believer that, hey, the consumer's fine, the increased job loss, increased unemployment is something that's going to slow down, and we're going to kind of settle down to a degree into this normalization period, and you believe the Goldilocks landing is still intact, then Visa is going to be a great buy at this levels. However, if the consumer does fall off, the economy does fall off, that's where you have to be a little bit more concerned with Visa. Job loss goes up with unemployment going up. Unemployment goes up, there's less money coming in for households. Less money for households, lower consumer spending. Lower consumer spending equals lower volumes as it pertains to Visa. Something to definitely keep in mind. But Visa has been, here we go. I was going to say in no man's land, but stagnant is a good way to put it. John's going to keep accumulating one of my favorite stocks and one that's going to continue to be a favorite, which is Amazon. Amazon, if you guys have followed me for any period of time now, I love companies that have multiple revenue streams. When one thing isn't working, they have another. There's a ton of companies out there that rely much more heavily on just one income stream. So when that falters, the whole company, the whole ship starts sinking. Look at Starbucks. If it wasn't for a new CEO being announced, which we talked a few weeks about, one that I love, the stock is still getting plummeted. They had their best day ever. And was it because they had some sort of like Prime Day sale revolution where they sold so much coffee? No, they hired a new CEO and that was their best day ever. Well, they still have a lot of issues to work out there. And they're going to be paying him a lot of money. And they're going to be paying a lot in fuel costs because he will be flying from Orange County, out here where I live, all the way to Seattle, Washington on a weekly basis, multiple times per week. So that'll definitely be interesting there. And investors will be footing the bill, not something that I'm all that excited about. Jay says Nvidia is going to 106, 111 zone. If this zone cannot hold, down to 94, 102. So yeah, right in that low 100s is kind of what I'm expecting. I think that's that first one that you mentioned, 106, 111 is kind of where I'm targeting some Nvidia. And again, that's where you dollar cost average. You could buy a little there, see what the valuation is. If it goes further, we buy a little more. That's why we don't, if you wanted to invest, say, $5,000, I would love to build a $5,000 position in this stock. Well, let's not go $5,000 in right away. Let's start by putting in 2. If it keeps going up, valuation makes sense. Let's add 1. But then when it tanks, you still have a little bit left over. No one here can time the exact bottom overall. So again, I say it often. My magic 8 ball stopped working many eons ago there. So Anid is in the program and a VIP. We will see you tomorrow, Anid. Great to have you. As always, thanks for the info and take care all. Christina, thanks for stopping by today. It was good to see you all as well. Jen, I'm considering AT&T for its $5.65 dividend. It was one of the few on my watch list that was up today. So AT&T has been a unique company. I always have a problem with those telecommunication companies in terms of their debt. It used to be, and let me see where AT&T is today. But I remember when I first started on Twitter back in the day, all the talk was about AT&T under 30. Grab it. Like that was the stock you wanted to focus on as an investor, especially a dividend investor. AT&T under 30. You saw the tweets all the time. Well, lo and behold, we got AT&T pretty much below 15 is where it fell to, and it's still below 20. And that's after in the past year, it's up 40% for this company here. So still trading at a single digits PE multiple at 9 times. So, not expensive, but again, this isn't a company that trades at a high multiple by any means. It's pretty much, where it trades at historically, that 8 to 9 times range. So you get a good yield in terms of upside. I don't know how much more upside there is after that kind of move in a slow moving company that's going to grow its earnings by, say, 3 to 5%. So not one that excites me, especially with all the debt, the mountain of debt that they have there. So what else will we have? What would be a great stock to have a Roth IRA? Well, the top of my Roth IRA, Stanley, is going to be SCHD. That's going to be my largest position. I tried being that I like dividend stocks. Doesn't mean I only invest in them, but I try and fill that up with as many dividend stocks as possible just for the tax benefits from that standpoint there. So, I'm always trying to take advantage of that. Doesn't mean I don't have dividend stocks in my taxable account, but I try and fill that up. So, the majority of all of my SCHD sits in my Roth IRA, and that's one I add to regularly and love to add to as well. So, great to have all of that there. So, that's pretty much what we have in store here for today's investing hour. And again, just to tell you guys one more time, in case you were late to the party here, is we have a Q3 market update. So we will be right back here tomorrow talking about our Q3 market update, going through where the markets are today, going a little bit deeper, looking at the charts, taking a look at my top 10 positions, discussing areas I'm concerned about, what sectors am I focusing on, talking about that seasonality as it pertains to September, because folks, you got to be geared up. You always have to be prepared for what's around the corner, and you always have to have cash available, because we never know when we're going to get those opportunities. But the odds are, looking back at history, that you could be getting those opportunities very soon. So you don't want to see those opportunities come. Then you go, oh, I don't know what to buy. And then you see someone on YouTube or Seeking Alpha say, buy this, and you just blatantly buy it with your eyes closed without doing any due diligence. Do your due diligence ahead of time. Be prepared. That's what it takes to be your own investor, to manage your own portfolio. Doesn't mean you need to be in front of the computer all the time, but you need to do your due diligence ahead of time. Always have a top watch list of stocks. What areas would you love to buy that particular stock at? We're going to look at charts. You can look at some of the valuation aspects. And if you're ever interested in learning how to do valuation, how to analyze companies, then join me on my 6-week program. We're going to have a special opening for that as well. So, but first, tomorrow, 8 p.m. Eastern time, we're going to have our Q3 market update. And I hope all of you guys will be joining us there. Again, it is free to join, folks. It is free to join. There's a VIP offering as well, where you'll get the book. and the recording and things like that. So hope to see all you guys there. It's been a joy coming into your homes today. Thank you guys. We had a record number of folks. I think we touched 400 today, which is the first time we've done that on the live show. It is amazing to see the growth in this community of all of these folks looking to build generational wealth. So it's great seeing so many new faces. It's great seeing the regular faces as well. And with that being said, we'll see you tomorrow, hopefully. See you later. Bye-bye.